Welcome to our Banking After Hours series, co-produced with Backbase, where we sit down with banking titans to get their views on the future of banking and beyond. We're joined by Teh Maimunah, who is the CEO of ACS Digital Berhad, and also Ridi Duta, who is the Regional Vice President for ASEAN and Backbase, a banking engagement platform. Now, ACS is among the 5 consortiums that was granted the coveted digital banking license just in April 2022. While the bank is very new, Teh Maimunah hardly new to the scene. To those of us in the industry, she's known as someone who's always advocating for digital financial services. So it's partly surprising to learn that you've joined a digital bank of this phase in your career. I don't know if you remember this, but a year before this whole digi banking thing that Bank Negara announced, we shared a panel and I jokingly say, maybe I'll see you as a CEO. And true enough, you're leading.
Were we not in Genting, sir?
We were in
Genting, yeah.
Unsurprising. But you spent so much of your career in incumbent banks from Hong Leong to M Bank. How is it different managing your team in an incumbent bank versus a brand new bank like ACS?
Well, firstly, it's like a fraction of the size. In incumbent bank, it's large.
Is it a fraction of the stress also? Or?
No, hardly. The difference is, I've been in banks where it's pretty much a well-oiled machinery. Things have been set up.
Yeah.
And most of the things we do is to improve on it or do new things, but within a setup that's already there. Here, you're trying to not just manage a team, but trying to nudge people into believing that this journey is worth taking. And that's really something else, because you need to have that element of adventure, because it is a lot of risk here. I mean, we don't know where we're heading. Huge undertaking. So it's not just managing stuff that we need to do, but the whole emotive journey. Yeah, so that even more than anything else.
Be able to inspire the team to lead the charge to disrupt things as well, right?
Yeah.
But maybe before we jump into the next question, I want to kind of address some of the chatter that has been going on in the market as well, right? I think the chatter around the market is that your consortium partner MoneyLion has pulled out of this relationship. Is that something that's confirmed?
Yes. They made a decision that they wanted to focus on the US market.
Right.
And we respect their decision. I think it was a big step for them when they were thinking about moving into Asia, because they had set up an Asian desk here. But so that decision was a decision that they make, and
I think it's a reality that a lot of startups are contending with the current interest rate environment. Everybody's just lasering in on the regions that are strong at, the business models they're good at, and just kind of axing some of the more adventurous things. And I feel like maybe that's probably what happened.
Capacity is also one.
Sure.
Maybe because when you're small, it's not so easy to venture out.
So maybe just one more quick follow-up question on this topic is that, how do you guys plan to navigate this moving forward?
Well, actually, we have a bank in Japan, and we have financial services across the region. And we also have a retail business. The past few years, actually, we have been moving towards greater use of technology and moving towards digitization in both our financial services as well as our retail business. So we are consolidating the assets that we have. But for us, our role is to literally set up the tech hub for Malaysia. And we hope we could be of service to our existing sister companies, both the credit company as well as our retail company. And so I'm building from scratch. Essentially, I'm building a tech company from scratch.
Quite the journey, isn't it? But speaking of the US market, just to kind of address some of the big things that's happening in the banking industry in the past week, right? So, as I'm sure.
SVB.
So I think that has, in a way, created a little bit of a confidence crisis in, I mean, it's not a new bank, it's a 40-year-old bank, but do you think, we will start already, then we'll jump back to Rajat. Do you think that moving forward, there'll be some fear or uncertainty with banking with new banks? Really?
Just this afternoon, I was at a lunch with a consultant from a Big Four, and this person was like, he was asking me the same question.
Yeah.
Asia is going to get impacted.
Yeah.
Purely based on the back of what SVB happened.
Yeah.
My personal take is yes, there might be a short-term apprehension, but it's not really going to affect Asia at this point of time in a big way. I think when I'm talking about Asia, I'm talking about growth economies, not so much the Singapore or Hong Kong, which is still very dependent on international markets. Markets like Malaysia, then even more emerging markets like it's a Vietnam, Southeast market, I don't see would get impacted by anything that's happening in the West, right? Because these markets are self-sufficient in a large manner. Whether it's a banking industry, whether it's a manufacturing industry, to a large extent, it's a self-sufficient economy only, right? So I really don't see a after effect of what's happening in the West to hit Asia. I hope I'll be right, because right for all of us, right? But that's just what I think is going to happen. Asia shouldn't be touched in a big way.
I think the contagion is largely contained thanks to the Fed's swift actions as well. And I think the biggest winner is, of course, HSBC in the UK. But jumping back to Rajat, I think that created some worry in some of the less large banks, right? So we see JP and we see Citi having the largest influx of deposits within recent history. So do you think by the time the digibank is launched in Malaysia that confidence crisis with newer smaller banks will still be there, or you think largely people will be quite comfortable with banking with a bank?
Firstly, I'd like to say that SVB had failed colossally in not hedging their interest rate risk. So that was really it. When I read what I did, I was like, literally 90% on their book, they hadn't hedged their interest rate risk at all. That is, I don't even know how the Feds were, did the Feds not oversee this?
I think they lost for deregulation with this idea of a
Yeah, so that was one. And then number two, they were without a chief risk officer for 8 months.
That's crazy. A bank without
for 8 months. You don't have a CRO, and then you don't hedge your interest rate risk. You're in a market that's volatile. Your customers are, VCs and stuff. You're bound to fall that way. And I cannot imagine how that they hadn't seen that they were heading towards that liquidity crunch. If you were going to do a big fire sale, of course it's going to,
affect them.
So that was a failure of that one bank, and maybe 2 or 3. But you must remember 2008, when the huge Western financial crisis hit. I say Western financial crisis because we were completely insulated. The local banks here are very well capitalized. Our regulators watch us like a hawk. I don't think we have that same kind of reaction and response. I was talking to the market. No, you don't see any one of our smaller banks getting people nervous moving into the bigger banks. You don't. So I think it's a very much a US, and I don't believe there's a contagion effect. I think it's contained because the bank was poorly run to begin with. Maybe weak oversight, I don't know. And then you have 2 or 3 banks hitting here and there. But other than that, I don't think there's any, to our markets. Whatever you see in our markets today is not an SVB kind of thing. No, yeah.
And I think a big component of that, as you mentioned, is also the strength of our regulators as well, right?
Yeah.
Policies they design, the frameworks they put around. I think looking back at the digital banking framework, a big portion of it is your path to profitability. Within the 5-year cycle, how do you become a profitable and sustainable business model? So maybe we'll start with Rajat and then jump back to Rudy. What's your game plan in this 5 years to be profitable?
Can't tell you too much. My competitors are out here. But, our mandate is, as you already know, is to serve the underserved. So it has, and within our own DNA in Aeon, if you look at Aeon Credit, our segment market has always been the B40s anyway. So what we intend to do, of course, is expand from what we're already good at and hopefully be able to leverage on our current ecosystem. That's about all I can tell you now. But
the ecosystem is sizable given
our ecosystem is sizable. Of course, plugging into it is it's a different story, but at least this is the start of that journey of trying to plug into the ecosystem.
And what have you observed in terms of how digital banks around the globe position itself for profitability. And I think it's certainly exciting because we're seeing some of the UK banks turning profit. Right? How do they do it? What are you observing?
No, we work with one of these digital banks, probably the only digital bank that has sustained the wave in Australia, because we had 8 digital banks, most of them are shut down.
Can't remember the exact number, but only like June.
There was 7 or 8, and then most of them are shut down because they were not profitable, and one of them have lasted, right?
Yeah.
We work with one of them, which is a very SME-focused digital bank. And I think that the recipe that we saw in their success was a very laser-focused in the segment that they were going after. They did not want to compete with the bigger boys because they knew they would not be able to compete with them.
It took a lot of funding to compete with.
Exactly.
Yeah.
They don't have those assets to compete with them. They knew that if this is, and going back to what Rajate was saying, right, the underserved market, even from an Australia context, let's say, they looked at the SMEs, the smaller SMEs as the underserved, and they went all out. The bank I'm talking about is Judo, which we all know about there. And they are profitable. Within, I think they took 2.5 or 3 years to,
Which is quite a feat, actually.
It's amazing. Right?
Yeah, I mean, quite a feat, yeah.
And when we talk to the stakeholders, the executives at Judo, they say it's only because we just want to go after one segment. We don't want to experiment with our segmentation. We can experiment with our offerings, with our products, but we don't want to experiment with whom we are going after. And because of that, I think they were able to hit that profitability. Now, when we work with a few other digital banks in the region as well, we keep hearing these things, right? We have onboarded X number of users. But when you really build the hood,
are they costing you this?
They are struggling. They are struggling. I can tell you they are struggling. And the reason they are struggling is because their OPEX costs are becoming, they are loading their OPEX costs so heavy in year 1, year 2, that they are not setting the foundation towards that path to profitability, right? One thing is showing the world how many users you have onboarded. The other thing is what's happening inside the kitchen.
Yeah.
And most of the banks are struggling because of their OPEX cost.
Yeah.
They have made decisions in terms of not just technology. Technology is one part of it, but also in terms of people, in terms of other investments, which do not warrant a new bank with a limited balance sheet to sort of make those investments, right? And that is where some of them are struggling. Some of them are shut shops. Some of them are really trying to figure out how do they get out of the mess. So I think 2 points that we have taken as a learning. One is that very clear focus in terms of whom you want to go after. And second is in terms of be judicious in terms of investments. Coming from a technology company, I shouldn't be saying this, but again, we say this because we are seeing a lot of banks making some of these fundamental mistakes. So what are you trying to build? Are you trying to build a bank, or are you trying to build a platform? Right? So I think these are some of the things that we see where it's a hit or a miss. People who have done it correctly, profitable, sustaining. People who have not done it correctly, probably struggling a bit.
So, I mean, on the flip side, we're talking about the ones that are successful. What about the ones that have failed? Like, what lessons do you think we can learn from some of these banks? What lessons are you avoiding in ACS as well?
Actually, that's one of the things that I was telling my guys is please don't come and say, oh, I've onboarded 1 million customers, and that is not really your KPI.
What's the unit economics of that, right?
We also here you have to look at around the world, and you have like stories like Nubank, and I look at Nubank, well,
Impressive numbers.
And good P&L, all right, good P&L, but you have to see they are in a market where MDR still matters, so you can't copy paste here, so it doesn't work for us here. So we look at, we looked at Australia very clearly. One of the things that we learned is, again, the price war and deposits. So a lot of them went out because for you to be able to lend out, you need to raise your funding. So they threw rates, and then what happened was, and they got a lot, and then they couldn't deploy it in time. So we also saw that. So danger, try not to do that. One is don't throw rates. It's not sustainable. Number 2, don't build up your liabilities so much, and then you're too late in deploying your assets, and then you're unable to give the returns. And then we saw how very quickly customers started pulling out once the cheap sale or the good rates are.
But the loyalty is just to the pricing.
So I know it's easy to say, oh, we want you to stay because the experience is so amazing.
But that's the goal.
And that is the goal, but to say that is not true. That is with some people. Some people are feeling extremely loyal to their digital bank because of the experience being great. But the other thing is, of course, segmentation. we have a cap also on the asset size. So with that, we are driven to know that, the segments that you want to go for, you cannot do big ticket sizes anymore. And you shouldn't, because, that is systemic risk. One pulls out, both on both sides of the balance sheet. So we've also seen this. We saw this in one bank actually in Australia. Big deposit, withdrawn, and suddenly you're caught.
Yeah.
So picking up from all those lessons, like thou shall not repeat.
Seems like the key theme of the day is risk, right? That seems to be the theme we're talking about. Maybe before we wrap up, anything to add in that particular?
No, I think the smaller point, right? I think Rajate was alluding to it. It's also about the people that you appoint to run such digital banks.
Yeah.
If you appoint people who come in with some sort of a debt in terms of mindset, that this is how it should be done, I think that's also an important piece. Do you have people who are not necessarily bankers, who come in from different industries, but with a point of view of how, digital should be, right? Digital in anything. It's not about banking as but digital in anything.
Yeah.
So again, a lot of banks have made that mistake of hiring senior bankers to run the shop, and they come in of trying to do the same thing in a different way. Here, as I think you would agree, right? Here you completely start from scratch, build from scratch, and there is no same thing in a different way. You have to think about what do I build, and that's where the type of people that you hire, their mindset becomes very important.
Certainly, yeah. Right before you
Exactly. Sure.
And certainly. So maybe to wrap up, let's talk about how we see like digital banks are changing the landscape. Right? So obviously it's something that's new to the market. What kind of changes, what kind of impact do you think banks and ACS will have for the future?
I really hope that we can be of service to, when you talk about underserved, we're not talking about, it's not just the B40s. I'm literally talking about, you're talking about the entrepreneurs, the SMEs, because the incumbents have been evaluating them credit-wise in a particular way. I'm hoping that we can bring a different landscape, give a different color, and really help to elevate their economic status and get them to reach out. So I truly believe that the digital banks can fit in that gap. That's my view, because Malaysia, unlike many other ASEAN regions, we are heavily banked, and almost everybody has 90-odd%, right? So that's very different from Indonesia. But when you look at our MSMEs, that's a very different story. The access into the formal financial sector is a little bit more limited. And it's not because of anything else. It's because how do you build a credit score differently than you would before? This is when you say, how do you really reimagine it? If you get a credit risk officer that's from a bank, but you kind of need to get a credit risk officer from a bank, but would that person be able to reimagine how this could be possible? So there are gaps in the market still. It's not that I know, because there were people that I couldn't serve before.
You were there.
Yeah, I was there, and I couldn't serve some people before, and I hope that collectively the five of us would be able to do that. And the interesting is the five of us are already in certain different segments, and therefore we should be able to fill in the gaps within our current ecosystem.
I think certainly, at the end of the day, it's the whole situation where the tide rides, the boat rides, and it's related as well, right? So some good points and what else.
But more importantly, is because now we're ready. Just 3 years ago, people before the pandemic,
different world.
So now, and I've seen the numbers, our micro SMEs in the region have got the highest usage of digital payment system, highest, beating everybody else, even Singapore. So
that's a point of practice.
So I was thinking, hey, so maybe our people are ready to, and they just need the solutions to fit their.
Certainly. And really, what are your thoughts on how this entrance of all these new digital banks will reshape the landscape in Malaysia and here?
It has already reshaped, right? I mean, even before the licenses were awarded, people were reacting to it.
Yeah.
What do I do to
spin-offs?
Right. So you had spin-offs, you had a lot of thought processes. You had the big consulting guys coming in and talking about roadmaps and we'll do this. So it has, in a way, I think it's good because it has
sales of sugar.
that's a different topic, but I think at least the discussions are the discussions that we are having are the right discussions, right? As I was talking in the previous chat as well, that technology is not being looked at as, okay, you come in, I eat this, can you do this? Okay, come in and do this, right? Technology is now being re-looked at. Can technology drive a business, right? Can technology help reduce, as I said, cost of acquisition? Of course. Can technology help reduce cost of service? Can technology help in loyalty? So, because of the impetus of digital banks, because of how all central banks in the region are pushing this agenda through, the way technology is being looked at is completely different compared to how it was 4 years ago. Right? Whether it's a small piece, it's a small fintech, let's say, an alternative credit decision, which is big today. There's so many fintechs out there, right? Or a slightly larger platform player like us. All of us are talking more, as I was saying, more to business stakeholders in a bank rather than technology stakeholders. We also feel that business stakeholders understand the value that we bring in rather than a technology stakeholder, right? Because it's not about keeping the lights on anymore. It's about keeping the lights on and beyond.
Of us.
And that is when digital banks, that focus on digitalization has really changed the the discussions that we are having in those meeting rooms. The sort of discussion. You wouldn't believe today I have less technical people in my team when I'm doing a presentation, and more business people come in and talk about business metrics and ROIs. And banks appreciate them. Banks appreciate that technology vendors are coming in and talking a business language rather than the microservices at the cloud.
At the different world.
It's a different world. And we are also adapting. We have been in a different world, but I think it's a move for good.
I think certainly we can expect more changes in Malaysia. We've seen how some of these digital banks has also affected change in China as well. We have a lot of farmers, fishermen, access to credit that they previously have. So
alleviated from poverty.
Right, exactly.
Yes.
That's
Villages in China.
Similar results for Malaysia. Because if we think about the income level in Malaysia, I'm sidetracking a little bit to think about what is considered T20 is above 20K, which honestly, I think you can do better. And ensure that, I guess, on that positive note, I'd like to thank both Rajate and Ridi for joining
Thank you for having us.
Conversation.